Hey, this is Jess with Track, and today we're going to be talking about closing periods. This is a new feature that we just released, and it's designed to help you lock down your accounting and financial portions of Track. This way that we can be confident that what we report as our accounts receivable or accounts payable or what we show on our balance sheets, what we show for our sales and expenses, all that can remain locked and steady as once we lock it down. Whereas before, you could easily delete some transactions or add some transactions to a period, and that period could be in a prior year or prior quarter, and it would make changes that you may not expect. So that's the problem that this closing periods are trying to solve. So the first thing is, how do you create closing periods? Well, first you got to add the right permissions. So we have a new permission called accounting that you're going to add to one of your users, one or more of your users, and only that person can create closing periods and manage the closing periods. Now, a closing period can be open or closed, so if you find a mistake that you do want to correct and change the history, then that's an administrative decision, accounting decision that's up to you and your company, so you can unlock that period, and we'll show you how to do that. But first, let's give those permissions. Let's go into, you click on your company, and then you go to users, and you find the user that you want to give the permission to. And you're going to see a new section here called additional permissions, and we're going to give this accounting permission to my user account. Now you'll notice a new menu item over here called closing periods. Okay, so how do we add the periods? They're pretty simple. You're going to click on closing periods, and we're just going to create a new one. And if you're just starting with this, you may want to lock down like all prior years, for example. So you could just create this big closing period from, say, like 2017 until 2021, or whenever you want to stop. Then you might want to get on a routine schedule of doing this, and it's just up to your company if you want to do it quarterly or monthly or annually. It really just depends on your preference. So for this example, I'm going to lock down the month of April. We're going to go ahead and make it closed, and when it's closed, that means that the month of April is closed and locked down. But I'm going to show you, if we click on edit, let's make a couple of changes, and then notice it says open now. When we go back, notice you're going to get a detailed history of what's changed with this closing period. You can see who made the change, what version it was, and then you can see what fields were changed. So you can see here I changed the status from closed to open, and then I changed the end date here. So that way you can get detailed information if anything changed for this closing period. So I'm going to set it back to close for the month of April. Now, what do closing periods affect? So they're going to affect anything financial. They don't affect jobs or even tickets, because tickets themselves aren't financially, don't affect your financials. It's the transactions on the ticket that affects the financials. So they affect statements, they affect reconciliations, they affect invoices, and they affect individual transactions. Okay, so let's go check out. We won't go through each one of these because they're all very similar: statements, reconciliations, and invoices. So we're going to go to settlement statements, and notice here I have a statement dated May 27th, so that's not in the closing period. We'll just do a quick, let's change the date on that. So it was updated successfully, no issues. But if we go back and find a statement that's in April, now let's go, and let's say we want to change the date. Even if we change the date into that closing period, it shouldn't let us do that because this period is locked. And so whenever we try to make a change, it might appear as if we could change it, but it's going to lock it down and tell us that why it can't be changed. Now, also remember that statements have transactions, and that's how we create statements, is that we add a bunch of tickets or transactions to the statement. And so whenever a transaction is on a statement, then it is also locked, even if its date is not in the closing period. Like, for example, this transaction date is in March. This date doesn't fall within the closing period that I set, so the transaction itself wouldn't be locked, except for that it's connected to a statement that's locked. So if we come in here and try to change this unit amount, for example, then it's going to tell us, hey, this record is linked to a vendor statement that's in a closing period, so we can't change it. And so it's not going to allow that change to happen. So if we go back to our statement, we'll see that that amount is still the original $12, not the $15. Okay, and that also means, obviously, we can't remove transactions from a statement because it's in the closing period. So this statement is locked. Now let's take a quick look at transactions, because they're probably the trickiest of this to understand. Transactions are locked date, but they're also locked by their parent, by their statement, invoice, or reconciliation. And so that means that they basically have two sets of rules. So the transaction itself can't be changed if its date is in a closing period, but it also can't be changed if its parent is in a closing period. And that also means that we can't remove it to a statement that's locked, and we can't add it to a statement that's locked. But if a transaction is in a closing period, but it hasn't been added to a statement yet, then it can be added to a statement or invoice, as long as that invoice doesn't fall within the closing period. So for example, you might have some transactions or tickets that are in a closing period, but they haven't been settled yet, they haven't been reconciled yet, or something like that. You can still add those to a reconciliation, as long as that reconciliation doesn't fall within the closing period. And that's because the transactions are affected by the date, and they show up on your profit and loss because they're income and expense, but they're not going to change your accounts payable or receivable until they get added to a reconciliation, and that's the date that changes that. So just as a quick visual, remember that you have a statement. It has lots of different transactions on it, and so they're connected and married to one another in that aspect. Okay, that concludes our video on closing periods. As always, reach out if you have questions, and we look forward to you giving it a try.